out to be around $500 million interest expense. And then because Sun Pharma would be using their existing cash on their balance sheet, which is roughly around $3.2 billion, you lose out the other income on that $3 billion plus, which is roughly around $350 million in the best case scenario. So you are spending around $800 million, $850 million out of your P&L to acquire $1.6 billion of EBITDA, right? And hence, the acquisition would be accretive from the year one itself on a reported earnings basis. And cash earnings basis, it would be even more accretive. So our estimate is that on reported earnings basis, this acquisition at a $12 billion EV, which is what was reported in the media report, could be around low teens kind of earnings accretion in year one post close on reported basis, and cash basis would be even higher if you ignore the depreciation and amortization.
Okay, but what does this acquisition bring to Sun Pharma? What will Sun Pharma become as an entity, and what will it be recognized as if in case this acquisition does go through?
Sure. So this is what my report tries to answer as to why it makes strategic sense to basically go for this acquisition. And precisely this, in my view, this will make Sun Pharma a global innovation focused company. Right. And when I say so, we all know that Sun Pharma derives 20% of the revenue from innovation medicines, but the point is they are still lacking a lot of front-end commercial infrastructure in a lot of the major markets. Right. For example, let's say their largest product, Ilumya, it is being currently marketed by a partner in European Union under the brand name called Illumetri. Right. Had Sun Pharma the required commercial infrastructure in European Union, they would have been able to capture the full economics of that product. So we have looked at this potential deal from an ends of matrix perspective, to analyze how this fits into the strategic priorities. And what we see in all the four buckets of ends of matrix, this deal brings good value accretion. So let's say it will double the size of Sun Pharma's presence in most of the major geographies like US, Europe, emerging market, right? So that's market penetration for you. Then in terms of product development, you are able to sell some of the Organon's product in your core markets, such as India. So in India, if you look at Sun Pharma, doesn't have a lot of presence in gynec and respiratory segment. They are there, but they are distant second or distant third player. Right now, can they leverage the strong therapy focus of Organon's, those products into Sun Pharma's strong market? The answer is yes. The third aspect.
Yeah, please go ahead.
The third aspect is the market development, which is the most underappreciated, part of this potential deal, is basically enabling access into new market, right? So as I mentioned earlier, that Ilumya currently being marketed by a partner in Europe, marketed by a partner in China. Now Organon brings $800 million China revenue. It brings know-how. They have commercial people on the ground, right? Can Sun Pharma leverage that to launch their own products into these new markets? The answer is yes. And last but not the least is the diversification benefit. With this potential acquisition, there is a 600 million plus revenue biosimilar business also comes along, which is a very sizable biosimilar business where Sun Pharma currently has no presence. So because their unbranded generic business is kind of stagnant for quite some time, I think biosimilar can kind of, fill that gap in terms of growth in that unbranded generic segment.
So Kunal, there are a lot of positives. You said it is a strategic fit, but again, debt continues to be a big part of this transaction, right? Do you think even if it is within permissible limits, the company will take some time to get back to its net cash position? What kind of internal accruals do they have? What is the cash generation which would lead to that position again?
Sure. So let's say a $12 billion EV, the net debt to EBITDA for the combined entity would be roughly around 2.5 times. Now, when I look at the historical operating cash flow generation, Sun Pharma has been around $1.5 billion annually, and Organon has been around $1 billion annually, right? So together they are anywhere between $2 to $2.5 billion annually. Versus that, you will have a debt balance of roughly around $8.5 to $9 billion, right? So typically, you would take, to get to the net cash, it would take around 3 to 4 years. Right, assuming some growth in both the businesses, etc., they would be back to the net cash position in 3 to 4 years.
Kunal, the street probably is uncomfortable with something, and that's reflecting in the stock performance. If you look at it, on a 6-month basis, the stock is down around 1.2%. It's not done anything in the past 1 month or not done much in the past 1 year. But is there a particular pain point that the street does not maybe like about the acquisition?
So I think the size of the acquisition itself, right? It's a really large size acquisition. In Indian pharma history, this would be the biggest acquisition. And then, how management would be able to allocate bandwidth and integrate this larger acquisition is one of the key focal points of a lot of the discussions that I am having.
Sure. Kunal, also apart from that, Eris Lifesciences, there was an announcement that came in, right? This was there's some Unit 1 and 2, where there was some inspection that's going on by the Croatia agency. For Eris Lifesciences, EU versus US FDA, which is more important, and how important is this investigation? And if anything doesn't go well, what will it mean for the company?
So for Eris Lifesciences, first of all, let me clarify that US FDA is not important, but they don't have any US presence. The Europe as well as the ROW presence also they have got because of the Swiss Parenterals acquisition that they did a couple of years back. Now this European Union, European Union inspection at the plant seems to have gotten some observation, and that would probably lead to the suspension of their EU GMP for now. The company is in the process of submitting their CAPAs and undertake the remediation action. But till the time, the reinspection happens and they are in the clear, there would be some impact. So if I have to quantify the impact, the company was focusing on doing some CDMO business in Europe, for which they have around 1,000 crore order book as of now. Of that order book, the guidance was around 125 to 160 crore rupees of revenue to be generated in FY27. Now that expectation, would be kind of delayed. In my view, because of these adverse observations. And then some of the other geographies which basically accept EU GMP certificate, for them, for those countries to kind of import the product. There also there could be a trouble given that EU GMP certificate might not be there for some time before the remediation takes place. So all in all, there is, I would say, some bit of growth delay that we'll see.
All right, Kunal, thank you so much for joining us with your thoughts on Sun Pharma. Very important what might happen as per media reports, and Eris Lifesciences as well. With that, we'll slip into a short break. As we do that, we are proud to bring back HSBC presents CNBC TV 18 Future Female Forward Season 4, co-presented by Cognizant, with a powerful cultural launch gala in New Delhi. Top industry leaders come together for a dynamic town hall on equity and leadership in New India, along with curated entertainment performances. The launch will also see the announcement of a special advisory committee to guide female micro-entrepreneurs through the year to drive more meaningful impact. Tune in on April 23rd, 5 p.m. onwards, only.
Fabindia Online Shopping.